Hello everyone, welcome back to our exciting journey into the world of stock trading. Today we are going to talk about a crucial concept, fundamental analysis. So, what is fundamental analysis? It's a method we use to evaluate a company's intrinsic value by examining related economic and financial factors. So think of it as a health checkup, but for a company. The first factor that we look at company's profit margins, earnings growth, and projections of the future earnings. Remember, a company with a growing earnings is more likely to be successful than one with stagnated or declining earnings. It is like choosing between a tree bearing fruits every season versus one that's not. Next, we look at company's financial statements, specifically balance sheet. The balance sheet shows us the company's assets, what it owns, compared to its liabilities, what it owes. Just like how we prefer to have more assets like house, car, etc. than liabilities, loans and credits, etc. In our personal life, we want companies with more assets than liabilities. Now, a company doesn't exist in isolation. It's a part of larger ecosystem, which we call market. Here, we look at macroeconomic factors too, like industry trends and even geopolitical events and government policies, etc. For example, a company in a tech industry might be affected by the trends like increasing internet penetration or government policies related to data privacy. In our upcoming videos, we'll deep dive into each of the factors more. We'll learn how to read these financial statements, how to analyze market trends, and how to use this information to make more informed investment decisions. Fundamental analysis might seem complex, but it's a key tool in your stock trading arsenal. With practice, you will be able to use it to identify potentially profitable investments and avoid potential duds. Hello all, welcome back. In our last video, we have discussed the fundamental analysis and understood how to analyze a stock using fundamental analysis. Now, let's understand it even deeper by using an example. Here I use Simply Wall Street website to do the fundamental analysis of any stock. If you see here, I'm doing the fundamental analysis for the Procter & Gamble. They have given the basic details here already, as they had a fair value according to their website, and it says that the P&G stock at this moment of time is trading at 6.7% below the estimated fair value according to the website. And its earnings forecast is expected to grow at 5.9% per year, and it pays a very reliable dividend of 2.5%. But there are risks as well along with this stock. It has a high level of debt, and there is a significant insider selling over the past 3 months that happened. In the fundamental analysis, the first thing that we have learned is we have to look at the earnings aspect of any of the stock. That is nothing but the net profit, and how that particular company is making its profits and its growth rate over the years in the past and the future projections, and as well as the earnings profit margin. We call it net profit margin, and what is the margin of that particular company. So let's deep dive immediately. So now if you see here, this is the earnings, right? So P&G has earned close to $81 billion as revenue, and its earnings, which is a net profit, is around $14 billion. So that's the margin of 17.3%, and which is a very healthy margin with respect to household sector, because P&G is part of household sector. So we should compare it with that particular sector. So this is how its net margin is. Now let's look at its past performance and as well as its future projections of earnings. I'll go to the past performance first. So compared to last year, its earnings have grown by 14.3%, which is also very healthy. Now, here is the graph of P&G over the past few years, how it performed with respect to its revenues and earnings. This blue line represents the revenue and this particular green line represents the earnings. If you see, from 2013 or in the last 10 years, P&G ensured its revenue to be around $65 billion to $83 billion. And with respect to its earnings, it ensured it is around $8 billion to almost $15 billion. There is a dip in between, but other than that, it almost ensured its revenues and its margins are maintained stably. So according to this data, we can more or less conclude that P&G is a very stable and a fundamentally strong company. Now let's look at other aspects of fundamental analysis.